Hello viewers, welcome to my channel. I'm Hasham Ali Khan. In this video, I'm going to explain you about the Reserve Bank of India and the functions performed by RBI. In the last three videos, I have explained you about money market features, functions, and what are the money market instruments. All these things I have already explained in the last 3-4 videos of this unit number 3. So if you have not watched, go to the playlist of my channel, select the subject financial institutions and markets. Select the video of this unit number 3, that is money market. Watch the videos. And in this video, RBI and functions of Reserve Bank. So before starting that, take the screenshot of the points which I have written. Then I'll explain in detail about Reserve Bank of India and its functions. Now, Reserve Bank. A Reserve Bank is the central bank of India. Then it was established on 1st April 1935 and it is fully owned by the government. The first point, remember, Reserve Bank of India is the central bank which was formed on 1st April. So, Reserve Bank of India is the central bank in India. It was formed on 1st April 1935 and it is fully owned by the government. And RBI is the regulator for all the banking related processes and activities. That means this bank will control, RBI will control all the activities, processes of the complete banking system in India. It is also responsible for the issue and supply of currency notes. In India, the legal tender money is Indian rupee, INR. So this Indian rupees will be supplied, will be circulated by RBI. Next is it manages the country's main payment system and promotes for economic development. So this RBI will help the government for making economic development in the country by financial system. And the Reserve Bank's affairs are governed by Central Board of Directors. So how this RBI will be function? So RBI will be controlled by Board of Directors who are appointed by the Government of India according to the provisions of Reserve Bank of India Act. And the term of each director is 4 years. And the board is headed by the governor and 4 or less deputy governors. So this is the structure of Reserve Bank of India. Now what are the functions of Reserve Bank of India? What are the functions it performs? So many functions are there. Few of the functions are, first one, monetary authority. This RBI is the apex bank for the complete monetary system. So RBI is the apex monetary authority in the country. It formulates the monetary policy of the country. That means whatever government implements the monetary policy, that will be governed by RBI, and which determines the extent of money supply in the economy. First of all, monetary policy is concerned with the money supply in the country. Monetary policy has an impact on various macroeconomic factors like GDP, like inflation, apart from that liquidity. All these macroeconomic policies are affected from the monetary policy. RBI attempts to meet the requirement of different sectors of the economy. In India, the complete economy is divided into different sectors like primary sector, secondary sector. Now government will give priority to some sectors. So this RBI will help the government in promoting a particular sector to speed up the economic growth in the country through the monetary policy. The ultimate aim, objective of the government is economic development, economic growth of the country. So for this, monetary policy is very important and this RBI will control the monetary policy. First function. Second function is regulator and supervisor of the entire financial system. The complete country's financial system will be supervised, will be controlled by the RBI. So RBI heads the financial system in the country. All the banks and non-banking financial companies, institutions in the country are regulated by the RBI. No bank can be formed without taking the license or permission from the RBI. That means complete financial system is controlled by RBI. The banks as well as NBFC, non-banking financial companies. And RBI plays the role of supervisor to ensure that all banks and NBFCs are functioning as per its guidelines. Not only it will regulate, but also it will supervise. The RBI will see that whatever guidelines, whatever provisions have been issued, are those provisions implemented by the banks and NBFCs or not. This is necessary to instill confidence in the banking customers and to strengthen the financial system in the country. Why the RBI has to regulate and control, supervise the financial system? Because the banks depend on the faith, on the confidence of the customers. If the customers loses the confidence in banks, then what will happen? Nobody will come and deposit the money in the bank. The banks will collapse, the financial system will collapse, leading to the complete collapse of the economy. So economy depends on the financial system, and financial system is in the hands of RBI to control, to monitor, to supervise. Next is custodian of foreign exchange. In India, a private person, an individual cannot deal in foreign currency without permission from RBI. So RBI is the custodian custodian of foreign exchange. RBI is the custodian of foreign exchange reserves of the country. That means the foreign currency will be under the custody of RBI. So all foreign currency earned or coming into the country is converted into Indian rupee. So whatever export, import, by exporting the goods, the country will receive the foreign currency. By importing the goods, the country has to pay the foreign currency. So all these payments and receipts of foreign currency will be in the control of RBI. Now this can be done directly with RBI or through authorized dealers permitted by RBI to deal in foreign exchange. So actually the complete control, the complete authority to deal in foreign currency is in the hands of RBI. But RBI has given this permission to authorized dealers, to some banks. So even the RBI as well as authorized dealers are permitted to deal in foreign currency. And all payments in foreign currency are also done by RBI. So receipts and payments in foreign currency will be done by RBI or its authorized dealers. Thus, RBI acts as a centralized authority with regard to foreign currency, which helps the government to take decisions about foreign exchange reserves in the country. So, all the foreign exchange reserves decisions will be taken by the government through RBI. So, RBI is the custodian. RBI will deal all the receipts and payments of foreign currency. Next one is maintaining exchange rate. Exchange rate means the rate at which one currency is exchanged to another currency. For example, presently the dollar rate in India is 81 rupees per dollar. That is the present rate. And this exchange rate will not remain constant. It will fluctuate. So the exchange rate is not pegged with US dollar or gold. Earlier it was pegged. But presently the exchange rate depends on the demand and supply. But if it is left to demand and supply, there will be a lot of fluctuation in the exchange rate, due to which speculative activities will take place. The government has the responsibility to stabilize the exchange rate. So here the RBI will apply different techniques in order to stabilize the exchange rate. Next one is issuer of currency. In India, the legal tender money, Indian rupees. The rupee will be issued, will be printed and circulated by RBI. So RBI function is, it is the issuer of currency. So RBI is the sole authority to print and issue currency in the country. It has adopted the minimum reserve system for printing new currency. So the system which is adopted for printing new currency is minimum reserve system. There is no uncontrolled issue of currency. Also, it destroys currency notes which have no longer been used. Therefore, the currency issued by RBI being authorized is called legal tender money. Because in India, all the currency will be issued only by RBI. So the currency issued by RBI is called a legal tender money. Next, controller of credit. The credit will be created by commercial banks by giving more and more loans. When the commercial bank extends the loan, then what will happen? There will be credit creation. That means money supply will increase. When money supply increases, it leads to inflation. The value of money will come down. So it is the responsibility of the RBI to control the credit creation which is made by commercial banks. Next one is banker, agent and advisor to the government. Just like an individual will have their own banker through which all banking transaction will be done. Just like me, I have a bank account. From bank account, I will make all bank transactions. I will deposit the money, I will issue the check, I will make the payment through my bank account. Similarly, the government will also have a bank account in RBI. So all the money which is received by the government is in RBI. All the payments which is made by the government will be through RBI. So RBI is the bank of the government, and not only banker but also it is the agent. So anything which is done for government will be done through the agent or RBI, an advisor to the government, because RBI is in close touch with the financial system. So what are the consequences of their policies? All these things the RBI will advise the government. That's why it is called advisor. So RBI performs all the banking functions of government. Receipts and payments on behalf of government are carried on by RBI. The government also borrows money from the RBI. So whatever banking activities of the government are there, that will be conducted by RBI. The next is it acts as a custodian of government by maintaining country's gold and foreign exchange reserves. Already we have discussed that RBI is the custodian of the gold as well as foreign exchange reserves. So RBI provides useful advice to the government on matters related to economic and monetary policy. One of the objectives of the government is to bring about economic development in the country. So this economic development requires policy to be made. So RBI will help the government in making appropriate policies so that there will be economic development in the country. It also manages public debt. Next one, last one is a banker's bank. This is the parent bank. RBI is the parent bank of all the banks in India. So every bank has to take the license, has to take the permission from RBI and follow all the guidelines or rules issued by the RBI, because that is the parent bank. That's why it is called banker's bank. So every commercial bank in India must maintain a current account with the RBI. Current account with the RBI. So RBI also acts as a banker of all banks in the country. It performs the same functions of commercial bank as an ordinary perform for their customers. Just like how individual banker, a single banker, commercial banker will give the service to the customers. Same type of services will be given by the RBI to all the banks. RBI holds their cash reserves, lend for them for short-term funds, and provides them central clearing and remittance facilities. So every bank has to keep some cash reserves with the RBI. Similarly, RBI will extend short-term funds to the commercial banks, and also clearing facility will be given through which one bank with another bank, the clearance, the remittances can take place with the help of RBI. So it is mandatory for all the banks to maintain a current account with RBI to ensure that there is sufficient balance in the account to avoid defaulters. So every commercial bank has to maintain a current account with the RBI, through which all settlement will take place between one bank with another bank. RBI also acts as a lender of the last resort. That means whenever any bank is in financial difficulty, financial shortage, then ultimately last resort is the RBI will come to the rescue to help the commercial banks. So these are the functions which are performed by RBI. So in this video, I have explained you what is RBI and what are the functions of RBI which are frequently asked in examination. Inshallah, we'll continue the next topic in the next video.